last in person since COVID. We're gonna try our best to make it happen. It would be CI 104. We'll give you updates as we get closer to the date. That would be at the ACBR as usual. And finally, we're planning for November 19th to have our virtual economic forecast. As you know, is probably our biggest event of the year, and we're gonna try to make it happen. A little bit of a shorter type of template, but that is scheduled for November 19th, and more details to follow. So let's jump into the program. We have a great guy that he's gonna be moderating. Let me introduce him to you guys. Many of you know him, Ryan Hoyt. As a leader of the JLL Atlanta Industrial Group, Ryan is responsible for overseeing the strategic development and growth of the industrial transactions, including acquisitions, dispositions, leases, site selection, and build to suits. Throughout his 18 years in the commercial real estate industry, Ryan has facilitated more than 35 million square feet of industrial transactions across the Atlanta region. Before joining JLL, Ryan served as VP leasing officer for Prologis, where he was responsible for leasing the company's Atlanta and Savannah portfolio. Ryan is a graduate from the University of Georgia. He's a two-time recipient of the NAIOP Georgia's Top Producer Award, and he consistently ranks as a top 10 producer with ACBR. So without much more ado, let's welcome Ryan. Ryan, it's all yours.
Thanks, Leo. You made me sound really great. It's an honor to be here today, and we have put together a really exciting group of panelists. As you mentioned, I'm very new to my role at JLL as the market lead. This is a player coach role, so I will be leading the team as well as building a book of business of my own. I spent the last 8 years at Prologis, where I had the honor of working closely with one of our panelists, Stacy Watson. And you know what? We'll let Stacy take it away and give his introduction.
Hey, good morning, everybody. Thanks for that, Ryan. Yeah, it's been a while since we worked that project together. Again, my name is Stacy Watson. I'm the Director of Economic and Industrial Development here at the Georgia Ports. Started here as an intern, so I've been here quite a while, been here for 28 years. And my current role, my day-to-day is working with brokers, working with our partners at the Department of Economic Development, Georgia Power, capital investors, engineers, just anyone that's involved in economic development of the state of Georgia. And I will get involved on the port's behalf when there's a project that involves import or export. So thanks for having me.
Great. Sandy, why don't you, Sandy Lake, why don't you give us a little bit about your background?
Hi, good morning. I'm Sandy Lake. I'm with the Georgia Center of Innovation for Logistics. I'm the Associate Director there and have been there about 15 years. The Center of Innovation for Logistics is a component of Georgia's Department of Economic Development, and we work with companies statewide that are involved in moving freight of any kind, not necessarily anything to do with people transportation, but everything to do with cargo and freight. So we work with companies both large and small to help them connect to the resources that the state has to offer, whether that be within our university system, connected to research and technology, or to other companies that are doing cutting edge things or service providers that might need, that companies may need to connect with, but don't know where to start or where to look. So we can help with RFPs and things like that. And then we also focus on the technology sector within logistics, because we know that every bit as important as the roads and rail that that our freight runs on is the IT that helps to manage all of that. So Georgia is uniquely complete in its service offerings of infrastructure and technology, as well as The center provides an annual Georgia Logistics Summit to bring the industry together once a year. And we also offer some information through a logistics market snapshot that we put out monthly, as well as various reports from time to time. So all of that information is available on our website at georgialogistics.org. I encourage you to check it out and look forward to, if you ever have a question around logistics and supply chain, we'd love to be your first contact.
Great, thanks. You make a wonderful addition to today's panel. With that, Aubrey Brown, why don't you tell us a little bit about yourself?
Hey, good morning, everybody. Thank you for the opportunity. My name is Aubrey Brown. I essentially am the business development person for CSX Transportation, the third largest freight railroad in the United States. We operate over 22,000 miles, 23 states, Washington, D.C., and 2 Canadian provinces. I am responsible for the location of rail-served opportunities in the state of Georgia and the state of Florida. I cover about 4,000 miles of railroad and work with every local ED department along those lines, including the state level contacts, the power companies, the site consultant community, commercial brokers, and the like. When a prospect is looking for a rail solution, we work with our partners to both evaluate the site, to do conceptual rail layouts, to see what will work, to give them an operating function. And our goal is to grow the railroad's business, to provide an alternative to a trucking solution, particularly for products that make sense. And we do believe, as you'll see on the panel, that the best days for the railroad is ahead. Thank you.
Absolutely, absolutely. I've noticed that, and I usually love what you do, Aubrey, but occasionally I'll be running maybe a minute or two late to a tour and get stopped behind a train that they just seem to be getting longer and longer. But thanks for that. We look forward to hearing from you today. I'm going to start off today with a question about, we can't ignore what happened 6 months ago on the onset of COVID. But what I'd like to hear from, and we'll start off with Stacy on this, is what happened, Stacy, at the port 6 months ago? What's happening today? And what's your bet on the future? I've looked at a lot of things, and a lot of the indicators are pointing up, and I hope they are. But let's hear what you have to say.
Yeah, and just to give everyone a little bit of context, here at the Georgia Ports Authority, I mean, right here in your backyard, we are a major player internationally in international freight, international trade. We are the number 2 container port on the East Coast and number 3 gateway for international trade into the United States nationwide. You've got LA Long Beach, which we consider to be the number 1 gateway. They're doing about 17 million 20-foot containers on an annual basis. Then you've got New York, New Jersey, that's doing about 7.5 million 20-foot containers, which we call TEUs. And Savannah, with this last fiscal year, we did about 4.4 million TEUs. Again, a world-class player. And we were down actually by about, our fiscal year runs from July to June. So we were down about almost 1%, 0.9%. And those numbers started to decline around the March timeframe, okay? March kind of hit us fairly hard. We were down about 18%, a little bit over 18%. So very tough time for us here at the ports. Very typical to what you've probably heard on other panels. When the pandemic started, it was a supply issue. We could not get enough freight from China because the factories were closed. They were coming off of Chinese New Year. The virus which started spreading. We just saw the start of everything, and it really affected us here because we do about 33% of our business with China. So March hit us hard, and as time went on, as the virus kind of spread around the world and China started to recover, it became a demand issue. All right, so people were not going out and buying their stuff, buying the retail goods. We move a lot of retail goods through our port. So it was kind of twofold for us. March was about 18% down. Then it started getting into the single digits for April, May, and June. July, we're down into the lower single digits. We're expecting, when we budgeted for our next fiscal year, or the fiscal year that we're in now, we budgeted to be about 12.5% below 20. So we're in fiscal year 2021 now. And Ryan, all indications are that, gosh, we're coming out of this thing. We're hoping that the Georgia Ports Authority and our numbers are the tip of the spear. We've actually had some record months with regard to container throughput. August was very close to what we did last year. August of 2020 was very close to what we did in 2019. We've set some records on the terminal. A couple of weeks ago, we did over 66,000 ship-to-shore moves, moves off of the vessel and to the vessel, which was a record week for us. Our gate moves, which are the trucks in and out, we were doing on average about 11,000 truck moves on a daily basis pre-COVID. During COVID, March, April timeframe, we dropped down to maybe 8,000 gate moves. Last week before last, we were getting, 13,000. We're averaging right now, if you look at the last 3 to 4 weeks, averaging about 12,000 gate moves on a daily basis. And again, this is all great, but you also have to remember this is normally a busy time for us, and it's compounded by retailers that are trying to restock their shelves. Everything that couldn't get in, during the COVID epidemic, and the retailers weren't restocking shelves, they're in a big push to get those shelves restocked and get that freight into the United States. And fortunately, because we're one of the more productive ports here, we're getting a lot of what we call ad hoc vessels that were not intended to call our ports, vessels that were not a part of the regularly scheduled sailings of an ocean carrier. We're the beneficiaries of several of those ad hoc vessels. So what we're seeing and what other ports are seeing around the nation is basically an imports surge for replenishing inventory, as well as our Christmas rush. This is our Christmas season right now. So, with the Christmas season on top of the import surge, we're beating our budgets for the first 2 months of this year. September, October look to be good months as well. So, keeping my fingers crossed, hopefully things will continue as they've done in the last couple of months.
That's great. Yeah, and I can understand how busy you are now with the current volume and the kind of catch up.
Exactly.
Tell me, so 32% comes from China. Is it heavily fractured for the list underneath that, or is there another country that stands out?
Yeah, it's fairly fractured from that point. As you start getting into the 10, 11% with Southeast Asia, with Vietnam and Thailand and those areas, and actually China is losing market share. Northeast Asia is losing a little bit of market share to Southeast Asia. So yeah, China's, a big part of our market share here in Savannah. Gotcha.
Well, great. Well, thanks for that. Sandy, do you care to take a stab at that question as well?
Yes. So as you can imagine, it has really roiled the logistics market overall. Demand planning and forecasting went out the window during this was unprecedented. So they weren't able to forecast like they normally would. All of the historical data just was no longer applicable. So demand planning, particularly for Home Depot, who saw their business soar as people were home and looking around at home improvements, they just said we just had to go back to zero in our forecast and start from there. Preserving cash flow and managing working capital were key at the onset and within the first 60 days of the pandemic. This pandemic very much accelerated companies' e-commerce strategies, where they had been looking at it maybe in the 5 to 10 year time frame. They were looking at it in the more immediate time frame, 3 to 5 years, because there's such a challenge right now to keep pace with inventory and e-commerce during COVID. And the companies that already were digitized and had a strong e-commerce strategy did well. That did not, that are still operating off of spreadsheets, are struggling, small business in particular. Demand for all things home improvement, fitness equipment, patio furniture, sporting goods, they all went off the charts. Anything that people, while they were home and looking around and bored and trying to figure out what to do, it was a scramble for the retailers to manage the supply, just as Stacy alluded to. Some companies in consumer packaged goods limited their SKUs in order to be more agile and efficient at getting product out. So maybe you're not seeing as much variety as you once did in some of your favorite products. Demand for appliances and furniture went up. Inventories levels in general are up under this COVID pressure to meet the customer demands. Companies are willing to incur increasing carrying costs. Large companies are investing more in robotics and other material handling systems within their distribution centers and warehouses to get product out, as well as alleviate, the labor strain that COVID brought on, but also, the general change in demographics that we were experiencing pre-COVID. As you can imagine, trucking experienced a tremendous slowdown during the shutdown, but load volumes are now at record highs. Carriers, just like with the ports, carriers are experiencing these Christmas levels, and they were experiencing them even in the months of June and July, where there's a little bit of a slower time for them. August, as Stacy mentioned, is the beginning of peak season for shippers as they prepare for the holidays, but freight capacity is tight. The spot market loads are becoming highly competitive, making it difficult for shippers in the marketplace. The contract market is 30% above what it normally is. Decentralization of warehousing and fulfillment has driven the need for smaller, more frequent loads, and that's pushed more business to the LTL sector as people are trying to manage their replenishment strategies. And then even flatbed, which slowed down in the beginning, is now seeing a surge because there's strong demand in commercial and residential construction. All of that is up and is keeping the flatbed market strong. And then e-commerce, that goes without saying, has shocked the parcel express world. Just trying to manage all of that, as you well know from your own experience, your Amazon 2-day packages maybe aren't getting there in 2 days like they used to. So those types of businesses are scrambling. They're scrambling to find drivers. They're scrambling to build out their networks, working very hard to meet all of our demand as the acceleration of e-commerce they anticipated an acceleration in e-commerce, but not this quick and this fast at the rate that it has happened during COVID. So those are just resiliency and uncertainty sort of are the overarching words right now within logistics in terms of COVID. As far as the future, companies will continue to focus on how can they manage this uncertainty. There's a focus on building resiliency. There's a focus on trying to manage tier 1 supplier risk. How can they update their sourcing strategies in order to not be caught flat-footed? They anticipate that there'll be a permanent shift and increase in shopping online. And you're seeing that, you're probably hearing that with Amazon continuing to build out their fulfillment centers and delivery networks pretty aggressively in order to meet this continuing demand. There's an accelerated trend toward a holistic approach to supply chain and not just transportation as a division within the supply chain. There's some uncertainty still about what's the impact of the supplemental unemployment benefits that have ended right now, and if it does come back, how much is that going to be? It's sort of a wait and see kind of approach, and a lot of companies are bracing for a decrease in sales as a result of that. But one of the biggest things that we've seen is like I mentioned before, is this investment in technology because right now, optimization, efficiency, resiliency, agility, all of those buzzwords are very important to being able to operate in this kind of environment. So carriers are looking at transportation management systems because they need to become paperless in order to avoid transmission of the disease, to make their drivers feel comfortable, so that, you know, we're pre-COVID, we were already in a demand, we had a shortage of workforce and drivers, so we don't need any more reasons for drivers to get out of that marketplace. We need to be able to attract them to the marketplace. Spot rates are helping with that. It is bringing some folks that had set out in the beginning of the pandemic because prices dropped so low. They're now coming back because they see a brighter future from that aspect. And then finally, we're seeing a little bit of an uptick in outsourcing to 3PLs as companies are trying to deal with and manage all of this change that's happened so rapidly.
Yes, lots going on. We've certainly seen an uptick on the 3PL activity over here at JLL. But yeah, I can absolutely relate to people spending a lot more time at their local hardware stores as they sit around their house and they look around and they say, hey, I need to do this project. I need to clean this up. I need a new couch. You know, it's amazing. It certainly struck the Hoyt household very strong. And yes, adoption of e-commerce was just rapid over the past 6 months. My in-laws that are in their 80s are ordering online now. So I don't think anybody would have bet on that demographic ever adopting. But thank you. Aubrey, why don't you kind of take it away?
So at the outset of the COVID pandemic, the railroads cumulatively took a very large hit. And the reason for that was our business within the beginning, the early part of March and into April, railroad volumes dropped by more than 25% within weeks. The reason for that was that the large automotive manufacturing facilities, the large facilities that produce in this country that use raw materials, shut down. We were unable to ship to those guys. And so what we had to do, like many others, we had to right size our business for the levels that we were experiencing. That included furloughing close to 1,000 railroad employees. And these are people that run trains. These are conductors and locomotive engineers. We had to, put locomotives in storage, had to right size the system. It was a difficult time. We had an exceptionally difficult second quarter, losses across the board. That was systemic across all of the railroads, particularly the Class 1 railroads, of which there are 7 in the United States. This is a operating railroad with annual revenues in excess of $350 million. The good news was that once the OEM started opening back up again, we started recalling staff. We had a temporary hiccup because railroad employees are union employees, and once they are recalled, it takes some time to put those assets back in place. Right now, towards the back end, we have seen an unbelievable and unprecedented growth in our intermodal business, our railroad container business. This is largely due to the extreme tightening in the trucking market. The railroad pricing on intermodal shipments is in many cases 10, 12, sometimes 15% better than a truck. If you're moving a shipment more than 400 miles, the railroad looks really attractive. We have expanded our footprint in the Atlanta market at Fairburn in South Fulton County by an additional 200 acres. We're in a partnership with a Western carrier, Burlington Northern Santa Fe, to bring additional containers into the city of Atlanta. There has been great growth of warehouse distribution around Southwest Fulton County as well. We're slowly seeing a return to better levels of rail service. On the merchandise side, we expect some growth moving forward. However, it is a strategy of the railroads to do everything in our power to become more truck-like, because the coal business for the railroads in the United States is gone. That was the moneymaker for hundreds of years. We've got to look at different ways of doing things, and we've got to become more agile. So in the intermodal space, as I said, we're up about 6% year over year. There are other major initiatives. We experienced this downturn during COVID, but we were working on some substantive projects that have come to fruition. And in Georgia particularly, we spoke briefly about Home Depot. I worked very closely with the Home Depot team in Atlanta on a major expansion across the country. They were looking at expanding in 10 different centroids, as they call it, and the first two were in the Southeast. We can tell you that we're hard at work on a new fulfillment center for Home Depot in Lithonia. This will be a rail-served facility. They've needed much more capacity on railroad center beam cars to bring in lumber, which they've not added the existing facility. So Home Depot saw this some time ago. They've invested in the future and growth. They've got a second major distribution facility going in Tampa. We've got two major feed mills to feed Georgia chickens that are coming online later this year. One is it's there between Atlanta and Tulliver County. They've never had an economic development project ever. It is exciting times. It's a $90 million project. Very good jobs. That's for Harrison Poultry Company. And by November, Pilgrim's Pride will be in their new North Georgia Ranger facility, which is a loop track unit train facility. They'll probably be getting around 36,000 tons of corn a week coming in from Indiana. So the ag side is looking good. Let's turn our attention for a minute to Savannah. Our East Coast ports are absolutely seeing, at least the East Coast ports, which are served by CSX, are seeing exponential growth, and Savannah is no exception. One of the things is that the investment that the Georgia Ports Authority have made in new rail infrastructure in Savannah is unprecedented. They've spent $150 million on a new rail project. We call it the Mason Mega Yard project. Essentially, and Stacy, help me if I'm wrong here, but when this is completed, we will be able to move by rail on the two Class 1 carriers, Norfolk Southern and CSX, 1 million containers. Today, at full capacity, we have 500,000. It is a huge boost. We spoke a little bit about that supply chain moving to the East Coast. Many years ago, Georgia was the beneficiary of labor unrest on the West Coast. They took that ball, ran with it, made a name for themselves. And then the aggressive stance and the excellent work done by the business development team of the Georgia Ports Authority, as we said, going after particularly a very large amount of resin, of plastic pellets that originate in the Gulf and now being shipped out of Savannah, has resulted in at least 2 1 million square foot buildings going up. A third, CSX and Norfolk Southern served A&R Logistics, which will be at the Savannah Gateway Industrial Hub site. That's a 2,600 acre site in Effingham County. There is a site a little ways further up from them, another very large site, the Georgia International Rail Park site, which is currently being developed. We at CSX are in talks with some development partners about developing one of the last remaining very large sites between the CSX Railroad as you enter Savannah. So Savannah's on the market. We are part of that. We're trying to bring additional assets. We're actually, we're hiring people at the moment. We've got one of our largest trainmaster classes currently undergoing training in Atlanta. So we think hiring will continue to be strong as we adjust for the increased levels of volume. And the good news is we've got about 30% of capacity on our railroad, both on what we call merchandise traffic, which is traditional chemicals, lumber, steel, that sort of thing, and then also on the intermodal side. So that's sort of in a nutshell. It was a negative, difficult story, had a difficult Q2. It has come back, it's roaring back, it looks good. We don't know what it looks like for next year, but we know that demand continues to look real strong, at least through the end of December.
Great answer, and really glad that you touched on Savannah and specifically the infrastructure down there. I don't think everyone grasps how critical and how much success in Atlanta in our region is driven by the port. And with that, Stacy, I'm gonna get you to update us a little bit and really, I think, CCIM is a designation that's probably the most technical designation you can get. in our industry. I think it's going to be good to arm them with kind of, so they can speak to their clients about the past 10 years and kind of what's ahead for the next 10 years regarding the infrastructure down at the port.
Sure thing, Ryan. The past, looking into the past. Like I said, I've been here for 28 years, and we've come a long way in a fairly short time period. Gosh, when I started here in the early 90s, we were doing about 450,000 20-foot containers. Right now we're doing, like I said before, about 4.4 million 20-foot containers. We've got the capacity on this terminal, just like Aubrey was saying, to take our container throughput to about 8.5 million TEUs, or 8.5 million 20-foot containers. And it was all done, a lot of strategy and a lot of good timing. We chose to work in the past with development authorities, in particular development authorities that were right around the Port of Savannah and what is called now the Savannah model. We were predominantly an export port years ago. Our exports actually outnumbered our imports. So to support that export market, you need what? You need empty containers. So we put a strategy together. Our exports were actually going out to Asia, a strategy together with the state, a strategy with our partners, a strategy with the development authorities to actually attract more importers into the Savannah area to generate empty containers for our exports markets, okay? Then things kind of took off back in 2001, 2002. There was a strike on the West Coast. If anybody on the call remembers that, there were ships lined up for miles and miles in LA, Long Beach, in that San Pedro Basin. And we were the beneficiary of a lot of that freight being diverted from West Coast to East Coast. So that in itself added to or assisted us in that strategy to attract more import containers. And it really, really took off. I remember those days when we were kind of struggling to handle all the additional freight. Our executive conference room looked like a war room with all the poster board around, trying to figure out how we were going to handle that anticipated freight that was going to come through our port. Well, we did that, and the freight kind of stuck and stayed. We grew by 31% that year, and the very next year we grew by 4%. So that tells you we grew quite a bit, and the majority of that freight stayed, and we actually grew our throughput. So we stayed with that model, and with lessons learned, we operate at a capacity that is actually 20% above our actual throughput, okay? So that if there are any anomalies in the market, we can handle it, and it won't affect the productivity of what goes on out on the terminal. And that is a case in point right now. If you go into the JOC and to any maritime related publications, and you look at freight moving through, say, a New York or an LA or an Oakland, they're having issues with that import surge. And that is something that we're designed to handle here, not just with equipment, on the terminal, not just with our employees, but also with chassis, with equipment that's owned by either the ocean carrier or their vendors, to make sure that we're able to take advantage of those surges, take advantage of these types of events, and continue to grow. One thing that Sandy mentioned is resiliency, and I'm getting off the subject a little bit, but it's evident as well that our strategy works well for Savannah, in the fact that during the COVID epidemic and up until our fiscal year ended in June, we were only down by 0.9%. And if you look at other ports on the East Coast especially, I think Charleston and Norfolk were maybe down 6%. New York, New Jersey was down, in the double digits. So as far as resiliency, we are that port that was able to handle it. And on the rebound, on the backside, we're growing at a rate that is actually faster than other ports. Our market share for the East Coast is actually going up. the past fiscal year by about 1% as well. So not only are we growing in container throughput, we're growing in market share, along the East Coast. For the future, gosh, we are moving forward with all of our big capital projects. One of the unique things about the Port of Savannah is that we're self-funded. We do operate for a profit, but then our profits are then reinvested back into our facility. It doesn't go back to the state legislature. It doesn't go to a shareholder. It's reinvested into equipment purchases, land acquisitions, IT infrastructure upgrades. So some of the things that we're doing, we're looking beyond the Garden City terminal. Like I said, we're doing about 4.5 million TEUs today, and we've got the capacity to do about 8.5. Actually, we just bought an additional 145 acres adjacent to the terminal. So we grew our footprint at the Garden City terminal from 1,200 acres to 1,345 acres. And what that means is that we've got a lot of scalability here, and we own and we operate our own facilities. We don't lease them out to a third party like many other ports do. So we basically control our own destiny here. So those big projects to help us grow our capacity and grow our throughput, we're continuing to invest. We've got zero debt right now. We're developing an additional terminal on the Savannah River, just upriver from the Talmadge Bridge. We've got an additional 200 acres that we're going to call the Savannah Container Terminal. And that's going to add an additional 2.5 million TEU or 20-foot equivalent unit containers capacity over the next 10 years. We're doing some infrastructure upgrades here on the Garden City terminal so that we can handle at any berth that we have. We've got the longest contiguous berth in North America. We've got over 2 miles of docking space for vessels, but the configuration of the dock means that we can only work those 15,000 TEU capacity vessels. Those are the biggest vessels to call the East Coast at certain areas on our terminal, at certain areas at the dock. So we're rearranging the dock. We're basically straightening a curve. That project is moving forward, and it will allow us to work those 14,000 to 15,000 TEU capacity vessels basically anywhere on the terminal at any given time. And I know most of you have heard about harbor deepening. We are the shallowest major container port in the world. Right now, we're at 42 feet in depth at low tide. Fortunately, we've got a 7 to 8 foot tidal range. So if a ship has to come in or go out, below 42 feet or 40 feet, we will actually wait for high tide to come in and high tide for that ship to leave. We don't want that to be the norm here. So that project is fully funded. We expect the Savannah Harbor deepening project to be complete December 2021, January 2022 timeframe. So we're going from 42 feet to 47 feet. And you might say an additional 5 feet. So what? We found out that for every foot of depth, an ocean carrier can load, depending on the weight, an additional 500 to 1,000 containers on that vessel per voyage. So it's going to allow us to add some additional capacity, mainly for our exports. Very, very balanced port here as far as imports and exports go, which is very important to those ocean carriers, the ship owners, because when they come to Savannah, they have exports, they have backhaul. We're about 60% import, 40% export on a normal basis. Right now, the exports are actually outpacing the imports, and we're probably about 55% import, 45% export. And those export boxes are heavy. An export box weighs about, 3 times that of an import box. And it's basically Georgia's commodities, Georgia's natural products. One of our executive directors called it dirt, trees, and chickens. Lots of kaolin from up in the middle Georgia area. We export tons of that in containers. Anything you can manufacture from a Georgia pine tree, the paper, the resins, the pulp, we export it. Poultry, we're the top U.S. port for exports of refrigerated containers. So lots of poultry, frozen containers, frozen poultry going out to Asia. lots of cotton going out to Asia. So you've got commodities going out, coming back as a finished product. So again, continuing to invest in infrastructure, not only at the Garden City terminal, but in brand new facilities on the Savannah River. We actually have another terminal, which is a break bulk facility and a ro-ro. Ro-ro is roll on, roll off. Break bulk is basically any freight that's not containerized. Well, we're going to utilize that facility for more containerized throughput as well. So we're taking the capacity of the Port of Savannah, Garden City Terminal, Savannah Container Terminal, Ocean Terminal, up to about 11 to 11.5 million TEUs on an annual basis. And this is all going to happen over the next 10 years. So that's fairly quickly, especially in these times. And we have the funds budgeted. Our board has approved those projects. So we continue to invest and we continue to increase the capacity and increase the opportunities for Georgians to participate in international trade.
Great. So Stacy, real quick, what's the percentage that goes on rail versus trucks from the port to, let's say, Atlanta?
Okay, total rail, truck is, we're about 80% truck and about 20% rail right now.
Got it. Okay, great.
And
so okay, sorry.
No, I'm saying it's pretty evenly split between CSX and that other railroad out there. We won't name them.
Right. So Sandy, tell us a little bit, because I haven't heard as much about it recently, but it's, we do have a shortage of truckers. Tell us a little bit about the driverless trucks or the caravanning trucks that I know they're doing some of that in Europe. How are we going to get things to Atlanta a little more efficiently? It's got to be, driverless trucks have to be a part of our future. When could that happen? Give us kind of a look around the corner.
Well, that's a good question. So we get this question frequently because everybody wants to know, when are we going to see automated vehicles? We already have automated vehicles that are highly automated, but they're still operated by a driver. And primarily the reason for that is twofold. One, the regulatory environment has still not been established for that, for a totally autonomous vehicle. We can do testing and piloting of those vehicles on our roads, but as far as wholesale usage of those vehicles, there's still a national strategy that has to be created from a governance and regulatory standpoint in order for it to be prolific out there. The technology is there, but they still say, even with all of the advanced technology, that you still can't beat a human driver and their reaction time and their ability to comprehend the entire situation, particularly events that happen at intersections and things like that. So the future for it is probably some combination still of a driver as a pilot in that truck, because it works very well on long distance, long hauls. But when you get into the metropolitan areas like Atlanta, there's just so many variables and so many things that have to be accounted for that a human is still better at than an automated vehicle. So the truck pilot will need to take over at that point and actually get to the last mile. That's probably more what we're going to see going forward and for a long time. There was some technology, there's a lot of investment in that world as well. GM just invested, well, some of that investment had to do with electrifying these vehicles more than autonomous vehicles. But as you know, Uber Freight, very involved, Waymo, Google, Tesla, all Volvo, they're all there's a lot of interest and investment going on out there in totally autonomous vehicles. But you'll see it probably sooner on the passenger side than you will in the freight side, just because it's such a litigious environment between trucking and the general population. And so it'll be a while before we see it prevalent out there on our roads.
I can see the smile on Aubrey's face right now with that answer. So tell me, we've got excellent rail partners, an incredible port. I keep seeing around this time each year, there is a tweet that goes out that Georgia is the best, for the 8th, 9th, 10th year in the row to work with in business. Can you touch on that a little more? I mean, we obviously are, great cost of living, a great airport. Can you touch on some other reasons why Atlanta, why Georgia?
Well, you of course, you've heard the great testimony about our port. That is a huge selling feature for international companies and companies that, global headquarters love to locate here because of that international airport, the port, as well as our extensive rail system. But in addition to that is our technology community. And then overarching that is just, we're an easy state to do business with. As you mentioned, Area Development Magazine for the 7th year in a row, it actually is 7 years straight. We have been the top state for business. And, that's no small feat, but part of it is because we work together as a team statewide, all of our economic development partners. So everybody that you're hearing here today, as well as, the statewide project managers, partners with Georgia Power, economic development, industrial authorities, we all work together as a team. And what we hear over and over again, when these companies are looking at our competitor states, they do not see that united front, and not just a united front, but there's a genuine working relationship and mutual respect among all these entities, and communication like they don't see in other states. And that is a huge selling feature for our state, not something that can go unnoticed, because it is a tremendous advantage, how we work together with all of our partners. And all of that has led to, even during this pandemic, from March to July, we saw 113 new projects that have been located here, created over 11,000 jobs, and nearly $3 billion in investment. That was just March to July. We saw big companies like Frito-Lay, ThreadUp, and Airman USA create roughly 65% of those new jobs and 75% of that investment just in July alone. So those companies have chosen to expand here. A German automotive parts manufacturer chose to establish operations here in Georgia. And as you know, we have a strong community for automotive manufacturing and automotive suppliers, because we're right in that triangle between Tennessee, Alabama, Georgia, and South Carolina for automotive production. We saw in the first week of August, as already been alluded to, Home Depot's expansion. They plan to create 1,000 jobs. HelloFresh established their first Southeastern distribution facility here recently. Zillow Group named the Metro Atlanta area as its new Southeastern hub. And then Zinus USA will develop their first North American manufacturing facility in McDonough. So, our infrastructure and our camaraderie and our expertise, not only in logistics and supply chain, but in economic development, speaks for itself, I think, for our state. And so despite COVID-19, we've seen 1.5 times higher job creation than we saw in the same 2 months of 2019. So that's pretty amazing.
That really is. I'm hearing chatter of some other really large projects focused on Atlanta right now. So I don't think it's going to stop, which is great. Aubrey, can you, for the professionals on the call, who may have a client that are adjacent to a CSX rail, you touched on kind of helping clients evaluate accessing rail. So can you give us maybe the timeline and process, a real quick touch on the timeline and process of maybe adding a rail spur to a development?
Right. So there are 3 things when you're looking at a railroad economic development project. Number one, you need a site. we will quickly do an evaluation of that site from an engineering point of view, because railroad engineering is very particular. 3% grade on a railroad is a very steep hill. We will then also look at what an operating plan looks like. And so not all rail lines are equal. If I think about Georgia, when you leave Atlanta and you go to Augusta on the CSX Railroad, that's called the Georgia Railroad. We have less capacity on that line than we do on the lines that leave Atlanta. Our railroad line leaves downtown Atlanta, goes through Vinings, goes up to Cartersville, Georgia, then splits into 2 tracks, eventually going on to Chicago. So the volume, the capacity that you have on the line determines what sort of infrastructure you need to bring if you're looking for new railroad service, because most of the railroad is single main track. In other words, it's like 1 lane of I-75. Think about traffic moving in both directions on 1 lane. So you need large passing sidings in which to get in. What has happened is, particularly in the more rural parts of the state of Georgia, where you had wide open spaces previously and rail has been around for a very long time. You know, Atlanta was called Terminus at one time because all of the railroad tracks came into the city of Atlanta. But what's happened as Atlanta has expanded and you've got rail operations in the city of Atlanta, those railroad operations start interfering with travel time, going to the mall and road crossings. You alluded to it earlier. It causes there's a huge hassle factor there. So where you go with the rail project is important. And particularly, look, for us optimally on a substantive manufacturing industrial type project, we look for about 100 acres to be able to have some flexibility. And there are many ways that
I think we might have lost you there, Aubrey. But what we're going to go ahead and do, since we've done a really good job filling our time, is to move to the Q&A section portion of our meeting. And I believe, Katie, do we have any questions in the queue? If not, please put them in.
Yes, there has been a question about the impact of air freight on this discussion, given, you know, that's the one component we don't have involved in this panel is somebody from the airport, which is also, you know, a dynamic factor in the conversation. So if someone could speak to that.
Got it. Sandy?
Yeah, I can talk to that a little bit. The, of course, you know, passenger traffic went down to over 90%. It was just unimaginable what has happened to the railroads, but they have been able to pick up air freight. Now, air freight is a last resort for a lot of retailers, but and so they're going to choose the slower, cheaper methods. But there is some freight that still has to move by cargo, by air, electronics and medicines, of course, vaccines, things of that nature will be moving by freight. The airport has also instituted some new technology that makes it more efficient for the dropping off of loads and picking up cargo there at the our international airport in Atlanta. So the air freight, you know, when we're out of this COVID cloud, pre-COVID and what we anticipate post-COVID, air cargo was very strong within our airport. Because we have so much international travel, that creates a lot of belly cargo space. So there was huge opportunity for filling up the belly cargo, and we have 14 different freight airlines already that operate out of the Hartsfield-Jackson Airport. So the capacity is there. The capacity has been increased on terminal just for freight cargo storage, and they anticipate that as the economy comes back, which some economists say it will be Q4 2021 before we see things back to normal, you know, levels back to normal. But we do expect that to return once people are flying and more things are continuing to recover in our economy.
Yeah, I remember reading an article about some commercial airliners throughout the pandemic when all other meetings were shut down. They were removing passenger seats and filling the area because the air cargo rates had gotten so high. And they were shipping all sorts of products that they would have never shipped before via air cargo. I mean, I read one article where it said they were shipping inflatable pools and hot tubs because there was such a demand because people were wanting to find activities for their children. I think CCIM's very own Jeff Pollock was one of the received one of those. He sent me a picture of it in the middle of it. But
well, I apologize. I lost my internet connection and I'm back. I'm sorry.
Great. We actually have a question for you, Aubrey, and that is, what is the status of the Hulsey Rail Yard in Atlanta?
Well, you'll be aware that the CSX, there were two railroad yards in Atlanta, the first being Tilford, about a 300-acre industrial park, at least a rail serving yard, which is no longer rail served. The Hulsey yard, there was a lot of speculation about that possibly being up for sale, and initially CSX considered that. That, I want to say, is under review. The railroads initially, when we implemented precision scheduled railroading, which included the monetization of assets and just basically running a streamlined railroad. At that time, there was a possibility that Hulsey would be included. The decision is not quite done as to what exactly will happen with Hulsey. We do know, we can tell you that it's not currently on the market for sale. We've retracted that position, and evaluation continues. They're using it for some business at the moment, but what exactly the future use of Hulsey will be, that final decision has not been made by CSX. However, we are not pursuing negotiations with any brokers to sell that property at the moment, and we are still in talks and negotiations with at least a portion of the Tilford yard out there on Marietta Boulevard.
Great. Katie, did we, I know we've got maybe a minute left. Did we have any other questions from the audience?
Here's one question I think that could be answered. Yep, sorry, unmute. One quick question for Stacy, I think we can get in this last minute. Is the capacity you mentioned inclusive of the Brunswick port?
No, those capacities that I mentioned were containers, going up to that 11 to 11.5 million TEUs. But, you know, we do have a good story for Brunswick as well. Down at the Colonel's Island facility, which is our auto port, we are the second busiest as far as number of units, auto port, second only to Baltimore. And we did about 650,000 units down there. So we're making investments in that facility, and we're going to take the capacity of the Colonel's Island Brunswick facility up to about 1.2 million auto units or railroad units. So things are looking up. Brunswick has been a little slower to recover than the container business and the business here in Savannah, but it will get back to pre-COVID levels within the next few months.
I'm just really happy that boat fell one way and not in the middle of their channel. That's something else. Well, thank you all. And of course, thank you to the panelists, the viewers, and the CCIM staff for making this happen. Leo, do you have any closing comments?
Yes, Ryan. Just want to thank everybody for being part of this program. Ryan, you did a great job. Thank you, Stacy. Thank you, Sandy. Thank you, Aubrey, for taking time to be part of it. It's encouraging, right? Despite of all the craziness out there, it's encouraging to hear and learn that good things are happening. So thank you, everyone. We want to thank also our sponsors. As you can tell, on our virtual backgrounds, we're able to highlight who they are. We would not be possible to have this without their support. The same for all our members. Thank you to all our members for being part of it. And thank you to our board of directors. I can assure you that our board is working hard to make sure that we keep this chapter moving forward despite of everything. So thank you again. Enjoy the rest of your day, and we'll see you next time.
Thank you. It's a pleasure.
Thank you.